right. Good morning, everybody. Welcome to New York session. Good afternoon or evening, wherever you find yourself. I hope you're all doing well. So let's start with the dollar index. Wonderful, wonderful, wonderful. I'm excited when I see price action playing out like clockwork. So, yesterday, I gave you something to use in order to see price continue going lower, which was, so if you go into the daily time frame, if we close below so the price point was 106.65. If we close below 106.65, then definitely they're going to send price lower because the gap would have been closed through. They would have closed through the gap, and then price will scream lower. And then if you recall, right, I mentioned that we'll be aiming for this low. Okay, so that's where price is going. But let me give you the I would say knowledge, but how do I know that that's what's gonna happen, right? It's from the monthly time frame. Remember I said that it's either we go and take out this high or we are gonna send a big down candle to attack this low, right? Now the reason for that is whenever we have this type of scenario, which is this candle taking out that low, whenever we have that scenario, if we are trading, okay, so listen to this part carefully, because you wanna you wanna see price the way I do, then this is how I did it. Okay, when you see this kind of price action where price will form like a turning point, right? It's a swing, but the third candle, which is this one here, it takes out the low. Let me use that one. So it takes out this low here, okay, and it rejects and then comes higher. When it comes higher like this, usually because we took out a low, then we expect price to go and take out a high. That would be the normal price action that we would usually expect. If we take out a low, then we go and take out a high. But in this case, we don't expect that, and the reason is, so make sure you have a pen and paper ready. The reason is that whenever we are trading above a high, in this case, let me use okay, let me use these ones. Oops. It's gonna keep doing it. Okay, that's not what I wanted to do. I just wanted one. Okay, so whenever we are trading above a high like this, like that, okay, when you're trading above a high and then you see that kind of price action, so we are trading above a high. In this case, if you look at the dollar index, you're trading above a high, a swing high. Okay, whenever we are trading above a swing high like that and price shows signs of going back, it shows signs of going back here. I use the terminology confirmation. When price gives a confirmation that is going down, which I'll dive more deep into how to basically look at the confirmations. I'll dive deep into that in future. But if we get the confirmation, because it's part of the confirmation criteria that I use, when we get the confirmation that we are going lower, so we're going to get that confirmation up here. There's 4 types of confirmations that I use, and this is one of them. When you see price doing this, okay, to me, that's a sign that we are going lower. It's not a sign that we will continue going higher. It's actually a sign that we are going lower, and it rarely happens on a higher time frame. So the next candle is going to be an aggressive big down candle, which is going to go and close below this candle's low. Okay, so it's going to be an aggressive down candle, big down candle that will close below this low. And that's basically what I said. If you remember, when the month closed, right, I said that it's either they're going to take it up or bring a big down candle, but I don't think it will go up here. Okay, and then there you have it. So the reason as to why I was expecting that, that's what I've just given you. When price is trading above a high like this, and then we get the confirmation like that, which is just one of them. There's other 3 that I've not talked about, but this is just one of them. If we get that, then you're going to anticipate the candle dropping aggressively. So now you've had knowledge about how the whole confirmation started. That was from January, when January rejected December's high. That was the sign, okay? And then I think, like I said, we'll talk more about the confirmations in future. That led to you and I predicting this candle being a down candle. And then by the end of this month, that helps also us predicting that candle. Okay. And then overall, as this was forming, the best pair that I commended was this one, GU. Okay. So you can see how you can use these concepts on the higher time frame and then drop down to the lower time frame to trade them. So on the daily, anything going up should be seen as a pullback. Once you have the understanding of what price is supposed to be doing on the higher time frame, then going forward, everything you want to do is anticipate pullbacks and then dropping, pullbacks and then dropping. Right? So we had price pullback here, and that was a pullback to drop, pullback to drop, pullback to drop, and then this one was also a pullback. Now, why did this happen here? Okay, why did that happen? Oh, my volume is low. Okay, let me see if I can turn it up. Is it better now? I think I reduced the volume for a reason, because I'm using a microphone and it's too loud, so it picks up the sound very easily. That's why, but it should be fine now. I actually reduced the volume. I mean, how the mic picks up the noise. I reduced it. Okay. So as I was saying, that's how you basically anticipate any run up to go down. Now, the reason why this happened, this move here happened, again, let's go back. Oops. Let me draw. Okay, so this is it. Whenever you have price action showing you, something like this, okay, when you have, now this is just lines, but it's basically the candlesticks, right? You see price going down, then it goes up, then it goes down, then it goes up. So this is a buy pattern, right? Price is going to go up. Now if it goes up, I don't know, depending on the time frame, if it goes up, and then it's coming back down in future, because we did have this low and another lower low here, that is called high resistance. It's gonna be hard for price to just trade down. It's not gonna trade straight down. Okay, so what price will usually do is when it gets to this area here, right in here, especially when we go below this high, the moment we go below this high, when price goes below that, you can start anticipating a potential move up, especially if there is a gap. Because when price is going up from here after taking out this low and it's going up, it will leave most of the time a gap here. Either it's going to leave it here as a gap, or it's going to leave it over there as an inverted fair value gap. Okay, so it's either you leave it here when it's going up here as a gap, or it's going to leave it there as an inverted gap. Inverted gap means this was going down, it created a gap, and then price goes above it, because price should have respected the gap, this one, and then go lower, but they go above it, so this will become an inverted gap. So they can have one here or one here, or they can have two on that same side. Now if price is coming down and you are anticipating it to go lower, aka the dollar index, we were anticipating it to go lower, okay, not go higher, go lower. When it gets to that gap, you're gonna anticipate them running up. Okay, you're gonna anticipate them go up. That up movement most of the time will take out some form of a high. Not all the time, but if there is a high close to this gap here, it's gonna take out that high and then drop aggressively to go and attack this low here. Okay, it's gonna run up, take out some form of high, and then run with speed to go and attack this low. So what you're seeing is basically a depiction of what I've just done on there. We had this low and this low. Okay, that is that, and then it had a gap. The gap was the one that we targeted earlier. It was here. Let me zoom in. This gap here. Okay, so when price gets there, because we're expecting them to go lower, this is where you can anticipate them running up to go and take out some form of a high. Most of the time, that is what it's going to do. Okay, most of the time, that is exactly what it's going to do. And then it will come back down aggressively with full speed to come and take out that low. And I think you've seen a couple of examples on, I think it was on euro. Sorry, gold. Yeah, it was gold. Okay, so if we go on to this high, this low, I'm sorry, this high and this high, then price will come back up to the gap. Because we have the higher high. It's just inverted. Okay, it's the same thing, but this time it's the opposite. So we have a high and we have a high and then we have a gap. You can see with this one we have a gap on here and then there, right? When price gets there, most of the time it will go and attack a low. So what I did for the dollar index, which is going down, this is inverted. It's actually going up. So if price gets there and then it goes down, takes out a low, then it will come back up with full speed. You can see how it actually gapped up. This is a sign of huge momentum to the upside, right? And then price basically screamed higher. Okay, so anytime you need to pay attention to this price action. Anytime you see such, you have to anticipate them retracing some form of a drop or some form of a rally. If you don't do that, you might be in a trade and you might expect it to just continue going higher, and it won't, or it wouldn't. Okay, so anticipate most of the time. If you have this and then we are going to go and attack this low, if there's a gap, pay attention. It's gonna bounce and then drop. Okay, I think we currently have one on euro pound, I think. Okay, the gap was not there, but you have this low and you have this low, and we are meant to go and attack this low, and you can see we are pushing higher. In this scenario, I don't think they will take out the high, but the pullback is happening because we have this low and this low, a lower low. So the pullback is happening, and then eventually we will go and attack that. So this week, that's actually the trade idea that I'm anticipating. Basically, I've given it on the portal, okay, for our holders. So that's basically a trade that we'll be trading for this week. We're looking for them to go and run this low here. Now, if they happen to stop us out and then go and attack this high, that will be even much better, because if they can take out the high and then reject, then it's going to be full speed to come and attack this low. All right, so live example before it does it right here. Apart from that, yeah, so back to the dollar index, we will be expecting price to go and attack this low. Now it's not going to, based on experience, it's not going to print up candles. It's not supposed to. Okay, based on experience, where we are now is not supposed to print, let's say, an up candle before taking out this low. It's supposed to print down, 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 and then we attack this low. So going forward, today we're expecting this candle to end as a down candle, and then tomorrow a down candle. Now I would want to see them take out this low before Friday. Okay, because Friday we have NFP, hence I don't want NFP to come and still we have not taken out this low. They might use NFP to take out the low, but I would prefer they take it out before Friday, so that on Friday then price will give us a pullback. So I want to see them take out this low by Thursday or even tomorrow, and then because we've taken out a major low and we hit the 50%, because that is the range, this low to this high, that's the range. This is 50%. Once we hit 50% for NFP, we can anticipate them pulling back up. Okay, we can anticipate them pulling back up, and then we can sell again to continue going lower. Ultimately, I think they will be coming here, right in here. That's where it's going to come to. So if we can get down here and then pull back, that gives an opportunity for us to look for lower prices. Okay, So that's basically your guide for the rest of the week. So anything happening, if you see any pullback during the course of the day, it's just a pullback. It's gonna continue going lower. So personally, GU is the go-to. I like this equal high. This one here is too clean. It's too clean. So I'm expecting price to go and take out that high. Right? So look for buying British pound. Buy British pound. Next one is euro. Euro, we will eventually take out this high. Price is gonna go for that. It's opposite to the dollar index, right? It's euro is just inverted dollar index. So if you look at the dollar index and then just invert it, when I say invert it, turn it around, turn it upside down. If I turn this one upside down, you will see that it's similar to that's dollar index. This is what dollar index is doing, and that's a trick. I use this trick to most of the time trade euro against the dollar. All I have to do is just change the colors of the candle, make this one black and make this one blue, and then you see that this is basically the dollar index. Okay, so if you want to trade the euro, it's the dollar index inverted. So this is a low that the dollar index is going to attack, but it's actually euro. So that's why I'm saying they're going to go for this low, which is a high. Okay, so that's where euro is going, and once we go above it, it might reach for this fair value gap. Then maybe a pullback will happen. So this is the range. As the range price is currently trading within. Okay. Another pair that I think if you're interested in, you can trade is the Aussie, because Aussie is very cheap now. I think yesterday I spoke about if you want to swing trade it, then buy where we are. But if you want to wait for confirmation like I do, then I got an entry today on this candle. So we took out previous week low and then we printed this down candle. So I bought this one, the opening of that candle, with a stop below the down candle. That's basically the entry here. Now in terms of targeting, I'm targeting this candle's low for now. Yeah, I'm targeting this candle's low. And the reason being Aussie might struggle. Okay, the Australian dollar might struggle going higher. Hence, this can easily pull back to this down candle, the breaker. It can pull back to it easily, but depends. And of course, if we do have some crazy economic calendar news on Aussie, then they might use that, and that is tomorrow early hours, 12:30 a.m. So tomorrow 12:30 a.m. They might use the GDP announcement on Aussie to catch up with what the British pound and the euro are doing. Now, the key word is they might use it to catch up. What do I mean catch up? The dollar index is dropping, right? Ours is supposed to be rallying, but it's not. It's meant to be going up, but it's not. So the easiest way for them to take it up is to use some kind of a news event. And we have one at 12:30 a.m. GMT, my time, tomorrow morning. Okay, so it's very, very early in the morning for me. It might be maybe evening time for other people, but to me it's 12:30 a.m. So I'll probably still be awake to observe it. So I want to see them use that news event to take the Australian dollar up. Now it's a risk. It's either you risk or not. So I've risked something here in anticipation that they're going to use that GDP to take the Australian dollar to this candle's low. And then we will see what will happen from there. Because it needs to catch up with what the euro and the British pound has done. It needs to catch up. Okay, and New Zealand dollar is the one that doesn't have any news event, so I'm leaving that one alone, because if I get in, there is nothing to fuel price to go to this candle's low. It might do it naturally, organic move, but it might take time. It might be a slow one. Hence, I like the one that has some kind of news event which can be used as a reason. So if you see the Australian dollar shooting up, or maybe let's say tomorrow we'll meet at 1. If 1 p.m. New York time we come here and then Australian dollar is up there, then you know why it did it. Okay, it did it because they were using that news event to push price to that level, just to catch up with what the other majors are doing. Okay, so that is that. I don't recommend the New Zealand dollar. You can trade it, but I don't recommend that. Okay, let's go to gold. Okay, so gold, yesterday I said I wanted to see them trade up into that gap, which they did. Yeah. And then we will see how today was going to trade. So on the daily, this was the gap. So at the time of our session, price was here, right? And I wanted to see them trade to that. Now they have. I was watching it to see if we get a rejection. We didn't get any rejection. And then we've screamed up again. That's fine, right? Now it does not give us a reason to sell, so we are not selling. I don't have a reason to buy, so I'm not buying. Now on the weekly time frame, it's either this down candle is a reaccumulation, or it's a confirmation for price to come back into a pullback. Okay, it's either it's a swing for price to come into a pullback, or this down candle here is a reaccumulation. To know which one it is, the monthly will give us the clue. Again, we are trading above a high. This is a swing high. When we are trading above a high, anytime we form a swing like this, then that can be used as a potential confirmation for price to come back into a pullback, right? But in this scenario, because of this gap here, we don't have any down candle, we've not taken out any gap. Hence, this down candle might be a reaccumulation. Listen closely. This down candle here might be a reaccumulation, meaning there's a high probability that they can go and close above this and then resume going higher, which projecting this down candle to the upside, you're gonna get upside objectives. Because I did not want to see them close like this so that we could get a trade to exactly where it price traded to, which is here. Right? Remember last week, Wednesday or Tuesday, I said I wanted us to trade here, but I want that to be this month. But they basically send price on Friday there. So this move that is currently happening, I'm watching on the daily to see how price is gonna trade here, right in here. I'm watching how price is gonna trade there. If we open tomorrow, because today is almost done, if we open tomorrow and then we take out today's high, okay, again listen closely. If we open tomorrow like this and then we take out today's high and then you see price reject on the 1 hour time frame, let me go to the lower time frame. Okay, so what I'm saying is this level, which is the 79 retracement level, that's what I'm watching. Okay, right here. Now I don't know if they'll take it up there today or tomorrow. I don't know, but that's the level you're watching. Okay, if we open tomorrow and then they do something like this, then you're gonna look for a sell to come back down, right? That's the only way you're gonna look for the sell. If that does not happen, just leave it. Let them go back above the high to confirm the down candle as a reaccumulation, and then we can resume buying. It's much easier that way. Okay, so I'm gonna repeat. It's either they're gonna open tomorrow, take out today's high, and then break down on a 1 hour time frame. That is the only condition for you to look for a sell on the gold. Okay, if they don't do that, do not attempt any sell. But if you want to buy, don't buy either, because you where we are now, that's not a good place to be buying. Right? If you wanted to buy, you buy down here yesterday, even though I'm not doing that. But if you wanted to, but it's gone. Okay, where we are now, that's not the right place to buy. Hence, let them go up. If they are going to, let them go up, close above that weekly down candle, and then we have a confirmation that that weekly down candle right, that weekly down candle will then be a reaccumulation. Reaccumulation means that they were buying the down candle, right? So the closing above the down candle will be the confirmation that price is going to continue going higher, and then we can look for buy. Okay, now I am in favor for none. I'll just wait for price to show me. Okay, that's the best thing. You always wait for price to show you what it's gonna do. Sometimes you know, sometimes you wouldn't. Now, seasonally, we do form a seasonal high in February. Okay, so based on seasonalities, we can say this might be a seasonal high, and then it will go down, and then it'll come back up. Okay, because it's bullish. So if we go down, we will still come back up. But are they going to go down from here? That I don't know. So let's wait and see. I'm giving you all the scenarios how you can anticipate it. All right, crude oil. So crude oil has disappointed me this year. It didn't give me my seasonal move that it always does. Now that does not change much because again, the move is between January and June. I'm sorry, January and April. So all these down candles forming might be a buy from quote unquote the big boys. So on the monthly, we might be forming something like this. So as it stands right now, these lows are too clean. They've gone way beyond what I would expect them to reverse from. Hence, I think they're gonna come for this low and then that low. Then I'll anticipate something forming because on the daily there's nothing to save price. There's absolutely nothing to save price apart from I think it was right here, this gap that we had. Once we traded through it, there's nothing left. So 67.52, I think that's where they're gonna take oil to. Meant to be that 66.37, that's where they're gonna take price to, and then eventually 65.25. Once they take out that, we will see what will happen because I think they will come back up. If they do it by mid March, then the probability of price coming back up will still be there. So we just have to look for a buy pattern to form and then basically we get in. So let's wait and see. Now, can you sell? Yes, if you want to sell. This is too clean. Now, there are conditions when I like to sell without assuming or without thinking that I'm chasing price, especially when these lows are so clean like this. When I'm selling here, I don't feel like I'm chasing price because I'm very confident that it will go for these lows. That's how equal lows and equal highs, that's how they behave. Price will always go for them. So when price is heading towards it, I'm not scared to sell it, especially when it doesn't have this condition, right? If it doesn't have that condition and it has this, okay, if it has this condition and price is here, I'm selling here because it's gonna run for it. But if it has that condition, I'm not. Okay, so this case we have these clean equal lows. So if I get a sell this week, I'll be all over that, especially if we can get a pullback on the H4 into this gap here. If we can get a pullback into this gap before running that low, I'll be all over it. And then finally ES. So ES is coming for the low. I think let's go to the monthly first. So they took out a previous month high, previous month low taken, and if they come for this low, definitely that one will also be taken from the 3 months perspective. Okay, so from the 3 months perspective, it looks to me that it's either March will continue dropping, or March will end like a down candle, and then April will drop and take out March low. But I think we are too early in March, hence maybe a pullback might happen and not attack this low. But whatever happens, 5724 5724 will be a downside objective for the S&P 500. Okay, so basically stocks are gonna fall. The stocks that are within the S&P 500. Okay, so if you do trade stocks, look at the stocks within the S&P 500 and short them. I don't go into those things because that's not my expertise. But if you like to trade stocks, then because there is a probability of the S&P, and if S&P is dropping, definitely the Nasdaq. I don't look at them NQ. The Nasdaq could be dropping, and if the Nasdaq is dropping, all the quote unquote technological stocks, aka Microsoft, and the rest. I don't know much about them, but Microsoft and the rest, they might be dropping. Let's see. There you go. Microsoft is dropping. I don't know other stocks that are within the Nasdaq, and Nvidia. That's also a stock that will also be dropping. Okay. What else? You name them. You check all stocks. All stocks will be dropping. Why? Because the Nasdaq and the S&P and the Dow. If you I don't know the symbol for Dow. Okay. This is not the Dow. I got the symbol for the US 30. That's what it's called, but that one will also be dropping. So all the Dow Jones stocks, you can look for sales on them as well. Okay. Right. Huge opportunity for March if you're interested in them. Okay, let's move on to cryptos. Okay, so I think I have XRP here. XRP, I think I said I'm bullish. I like the rejection below the previous month low. I like the close above the previous candle's high on the weekly. I just don't like the pullback. Okay, but on the H4 it looks good. Okay, so on the H4, if you measure this low to this high, basically that's your trade entry for continuation to the upside. So we came to 70.5, which lines up perfectly with the breaker, the last up candle prior to the move up. Sorry, to the move down, and then it went up. That's where we came to. So the best one out of all the cryptos is this one to buy. Okay, so I'll look for XRP to do something like this. Now, again, if you go back to the daily, this candle's high, we are not supposed to close below it. Let me zoom in. This candle's high. Price is supposed to stay above it. Okay, price is not supposed to close below this candle 2.2201, similar to the dollar index. Here, same thing. This candle's high. We are not supposed to close. As soon as we close, next day we will drop. So here, same thing. This gap needs to stay open. So today's candle, based on the H4, that's it. We're not supposed to come down again. So even with the buy, if you're buying right here, you can safely put your stop loss below this candle's low, which comes in at 21756. Okay, you can put your stop loss below that and then expect them to go higher, because if they go below that high on a daily, you'll be wrong anyway. 2.2201, right? You'll be wrong. So if you want to buy where we are, leave your stop loss below this candle's low, and then let's wait and see if they will come in again. All right, so that's that for Ripple, and I think I like that one. Okay, that's the only one that was able to break structure after the month ended. Okay, so we had a run and then we broke. So that's the only one. Bitcoin couldn't do that. Okay, it couldn't go above that high, and based on the narrative yesterday, it closed below that. So typical example right here, live. If they close below it, the next candle is going to drop. Okay, and based on the monthly, that's why I said it's not likely. This candle is not likely going to be a reaccumulation. It's going to be very, very hard for Bitcoin to go up. So for now, all Bitcoin buyers should cool their engines and then look at something like this. Right, we might come back down to attack this low here, and then somewhere in here, this 71991, that area, that's where maybe buyers might come back in again. I don't think it's gonna struggle. With yesterday's close, it's gonna struggle to go up. So watch this area here. That's where we're gonna go next. Ethereum is just dead. That couldn't even go anywhere. Yesterday rejected everything. Worse than worse than the Bitcoin. So let's see where Ethereum can trade next. Okay. Okay, so we can trade to 1942.26. Okay, 1942.26. That is level for Ethereum. So if you trade Ethereum, look for downside objectives 1946. Right? Yep. Right there. And then they can go as low as this candle's high 1868. Okay, they can go as low as 1868. Hype. So hype couldn't also go up. It struggled with the H4 range yesterday. And then run below the low, breaking this high, pull back, struggle to go up. Once we go below that low, that's it. No coming back. So with hype, as it stands, they might trade to this candle's high, but we don't have enough data like the British. I'm sorry, I keep saying British pound. I need to go and buy British pound. Let me see. It looks like I'm being prompted to buy British pound. Okay, because I keep repeating British pound. We don't have enough data like Bitcoin to know, okay, we will trade here or there. There's few candles on this chart, so the next downside objective will be this candle's high. But apart from that, I don't have anything else because I don't have enough data to show whether we're gonna go here or there. From the monthly perspective, same thing. It's just few candles. Okay, so watch 1496 one. That's where price will trade to next. And within that area, if you want a specific price point, then it will be this candle's high. One 4.444. Right? So that's hype. I've already talked about Ripple, the tool. Yesterday I was very confident that after breaking this gap, they might take price up, but the H4 couldn't hold this gap here. So this low to this high, the gap below 50%, this one, the moment they close below it, that's it. I think in future, what I'll do is we talk more about gaps, because once you understand what gaps are and the purpose of how you can use them to either filter out trade ideas, you can use them to even place your take profits where you're gonna expect price to trade to, and then most importantly, use it to determine when price is not going to do what you expect it to do. Let's say you're bullish and price prints a gap, so you're bullish, you're expecting price to go higher, and then price prints a gap here. Under normal circumstances, they're supposed to hold. So if they trade through it, that's a huge telltale sign that price is gonna do something like that. Okay, so here, as soon as they traded and closed below that, that was it. If you're long, you just close it because it's not gonna work. And then the same thing for sells. If they are going down and they create gap and they pull back and you sell and it goes above it, that's it. It's gonna go up. Okay, so right now it's a either buy and then sit on it or don't sell, because I don't recommend where we are. You don't sell in discount. Okay, when price is cheap, you don't sell, you buy. When price is expensive, that's when you sell. Okay, so where we are now, I don't recommend selling. Touch key, same thing. I don't recommend selling. I still recommend the range that price has created. Now what will negate it? Let me go on to the daily. Let's remove this joint. I hate that big candle, but it's there anyway. So the reason why I'm still looking for the higher prices, I just explained it to you. This gap, okay, is because of that. We are still within it. We have not gone below it, and as long as it's open, price should come up here. Okay, as long as it's open, price should come up here. Hence, I'm looking for the higher prices. Now, if they can go all the way down and close through it, then that's it. Then they will resume going lower to attack these equal lows as I was looking for when price was here. Okay, so as long as we are inside this gap here, this is just a complex pullback situation. Price can always go back up, but if they close below this, then forget it. Price will likely trade below this and then come for this equal low. Okay, AI, I'm not gonna talk about it because again, we are cheap, we are not selling. Buy more if you can and just leave it alone because it can't go to zero. And the project behind it, that's the only, I think, project that I've looked into, and that's the only one that I like. I think there's other projects going on, lots of meme coins going on, utility wise, but the one that caught my attention was AI. Okay, so where we are now is come back to 31, so it's now cheap again, right? So if you wanna buy cheap, then do your best to buy where you are. It can trade to the 21, that gap that I pointed out right here. Let me zoom in. This little one. Keep an eye on that one, because if it can get there, that will be extremely cheap again. So that will be another buying opportunity if they can trade there. Okay, or they can just take out the previous month low and then reject. Okay, so if they can trade in that gap, then you buy more and then you just sit on it. Because if we see Bitcoin start going up, if we see Solana start going up, this thing is gonna scream up like crazy because it has the potential to print maybe 30%, 40% in a day. Okay, easily this pair. So there you go. So let's go back and talk about Euro Pound. Euro Pound is approaching that level. Okay, now based on the explanation that I gave, it has the potential to go up here and then run down again. Hence, the way I personally would like to trade this is to wait for a confirmation. Okay, I'll wait for price to get there and then give me a confirmation that it wants to go lower. What type of confirmation? They run up, reject, confirmation, then I'll sell it. If you can't afford to be in front of the screen, that's when you use a limit order. But if you can, then don't. Just wait, because it can't keep doing this, then that, then we go for the low that I mentioned. All right, and then same thing for gold. Do the same thing. Notice that they've not come for that level. Reason, they might be pausing, and then tomorrow, so we'll see what will happen. Okay, so that brings me to the end of the session. I will see you all same time tomorrow. But definitely do keep your eye on Australian dollar for 12:30 GMT because of the GDP announcement. It's very volatile and it can push the Australian dollar higher. Okay, so that's it from me. Enjoy the rest of your day, and I will see you same time tomorrow. Take care.